Hello 3E. Today we're going to be learning about income tax and how to file our taxes. So this is something that you'll need to do, or maybe you've already done if you have a job, and it's something that's done every year, or at least it should be done every year. So follow along with me as we go through this note, and we'll do some examples together. And if I'm going too fast at any point, just make sure that you pause. So when you have a job and you're making money, it's called an income. So income tax is money that you pay to the government when you have an income. And the government uses tax money to pay for things like schools, roads, hospitals, and tons of other things. So it's very important that we're paying our taxes. Every person who has an income is expected to complete an accurate tax return every year and submit it to the Canada Revenue Agency. You may have also heard it called the CRA. And this needs to be done every year by April 30th. After April 30th, penalties and interest start to apply if you owe money. So when you file your taxes each year, you could either, when it comes back, you could find out that you either owe money or you are getting a refund. So if you're ever file them late and you happen to be someone who owes money that year, they'll start to add on interest. So the sooner you pay, the better, because the longer you wait, that interest is going to keep adding up. And instead of paying, let's say, the 500 that you originally owed, it'll eventually be 550 or 600. So that's why it's really important to do it on time, so you can find out right away if you owe or not, and that way you can pay right away. So each year you need to report your income, claim your deductions and credits, and calculate whether you whether you owe tax or get a refund. So in order to do this, each year you must fill out your tax return using correct and complete information. So we'll look more into this a little later in the lesson about what type of information we're talking about, but it's information that will be given to you or sent to you. And then you need to send this return to the CRA by that deadline of April 30th. And then you also need to pay your taxes when they're due. So if you do owe money, you need to make sure that you're paying that. You also need to make sure that you notify the CRA of any changes to your personal information that could affect anything. They need to know how to get a hold of you, and they need to have kind of all your up-to-date information in order to do your taxes properly. So things like a change of address or your marital status, if any of that changes, it's something you need to update on your CRA profile on your account right away. So there's a few different ways you can do your taxes. So you could do it by yourself, just by paper, and mail it in. So you can get the forms. You can either print them from online or pick them up at a Canada Revenue, a Canada Service office, or you can also file it by yourself online. So there's different programs that you can download. One of them I know is called TurboTax. Another one I found online was NetFile, and these allow you to do it online. You could also have someone else who's certified file them for you, and there's lots of different places that will do that. An example of that would be H&R Block. Sometimes there's also community volunteers who will help assist you with your taxes. So they might do that for a very cheap price or maybe even free. And finally, you can also call the CRA and speak to an agent, and that agent can assist you. So if you're trying to do it by yourself, but you have questions, you just don't know what to do, there's always people that can help. So we'll turn to the next page here. Are you eligible for the GST or HST credit? So because some of you may be close to 19 years old or already 19 years old, you may be eligible for this credit. And this is something that you get only after the age of 19, but you also need to file your taxes in order to get it. So this is another reason you want to make sure you're doing your taxes every year and on time, so that if you're eligible for this credit, you can start getting that. So when you complete your tax return, the CRA will automatically determine if you're eligible, and then it will calculate how much you're going to get. For us in this class this year, this kind of calendar or school calendar year, think about whether or not you're going be turning 19 before the end of April 2022. So that's later on next semester. So if you are going to be 19 before that date and you file your taxes on time, then you could get a GST HST credit shortly after your 19th birthday. So now, how much is the credit? So it's calculated based on your income. So if you're a single student with no children and earn less than $9,000 per year, you could get up to $280 per year. So this is something you definitely don't want to miss out on. And it's generally paid over four different payments. So you get paid the 5th of July, the 5th of October, the 5th of January, and the 5th of April. So we're going to go through a few examples here on different ways to calculate tax based on a given annual salary. So we've got something called a flat tax calculation. So this just means it's a flat rate. So that means it doesn't change. So no matter how much you earn, you're just going to get taxed the same percentage on your whole income, so your whole salary. The next one that we're going to look at is progressive tax calculation. So this just means it starts at a lower rate for the first part of your income, and then it goes to a higher percentage, a higher rate for the second or the other part of your income. Regressive tax rate or regressive tax calculation is just the opposite of progressive. So it means that you'll get taxed at a higher rate for the first part of your income and then a lower rate for kind of the rest, the other chunk of your income. So we'll see what this looks like by doing a couple examples here. So if we could turn to exercise 1 below, I've got 3 situations and we're using the same people, Jack and Emily, in each situation, but we're using a different type of calculation, whether it's flat, progressive, or regressive. So it says Jack has an income of $30,000 and Emily has an income of $60,000. Calculate Jack and Emily's income tax for the following situations. So again, our first situation is flat. So to calculate flat, we're just going to multiply our percent here, but we need to change it to a decimal first, by their income, their salary. So to calculate that, let's just get my pen ready here. So we're going to have 30,000 times, and again, we're going to change this to a decimal. So if we do that, we're going to get 0.15. So that's what we're going to use down here, 0.15. And you'll remember from the last few lessons that we get this decimal just by dividing by 100 or by moving our decimal place back by 2. So when we do that, we're going to get a total of 4,500 or 4,500. So now let's do the same for Emily. So she's got a salary of 60,000, and we're also using that same flat rate of 15%, so decimal 0.15, and so her tax is going to be 9,000. So now it wants us to calculate our income after we pay taxes. So we're going to deduct those taxes from our income and see what we actually get to take home. So we're doing that by subtracting. So we're going to have our 30,000 and we're going to minus whatever our tax was. So in Jack's case, it was 4,500. So when we do that, we're going to get 25,500. And we'll do the same with Emily. So we've got that she started with 60,000 and we're taking away 9,000. So she's going to be left with 51,000. So that's our flat tax calculation. Now we'll scroll down and take a look on the next page for our progressive tax calculation. So for progressive, again, we're getting taxed at a certain rate for the first part and then a higher rate for the next part. So you'll see that we started at 15 for the first 20,000 in this example, and anything over 20,000, we're now getting taxed at 25%. So we see it goes up. So we'll now do our calculations here. So we're going to take, because it's just the first 20,000, we're going to have to use that number when calculating this. And that's at a rate of 15%, so decimal 15. So we're going to get 3,000 when we calculate that. And because, again, no matter whether it's Jack or Emily, it's telling us that we're just calculating the tax on the first 20,000. So even though Jack and Emily earn different amounts, they both at least earn 20,000. So this is going to be the exact same for Emily as well, because we're just doing that same calculation, 20,000 times 15%. Now is where it changes a little bit, because now we want to figure out how much over 20,000 each of them make. So Jack, we know, makes 30,000. So that would mean he makes another 10,000 on top of that 20,000. And we'll jump over to Emily for a sec just to figure out hers. So on top of 20,000, she makes another 40,000 because her salary is 60,000. And now for these, we're using the rate of 25%. So as a decimal, it's going to be 0.25. So we'll do that for both of them here. And then we'll go ahead and do our calculations. So this one's going to be 2,500 for Jack, and Emily is going to be 10,000. And now this one just wants the total. So we're going to take that by adding for each person the tax that they got. So this is the tax for the first 20,000 for Jack and the tax for the rest of his money. So we're going to add those two things together in order to get our total. So we're going to have the 3,000 plus 2,500. So his total that he's getting taxed for his entire income would be 5,500. With Emily, she's got a higher income and hers is going to be higher. So she has that 3,000 to start, but then for the rest of her income, she's getting taxed 10,000, so quite a bit. So her total is going to be 13,000. And now we just want to know what's their income after paying taxes. So again, we're just going to start with their salary or their income, their total income, and we're just going to subtract their taxes here. So Jack started with 30,000, and we're going to take away this, what we have above the 5,500. And when we do that, we get 24,500. And Emily started with 60,000, and we're taking away 13,000 in taxes. So she's left with 47,000. And now we'll go to our last example on the next page here, which is regressive tax calculation. So it's very similar to the one above, except you'll notice the percent we start with at the beginning for the first 20,000 is 15. And the next one that we do is actually smaller. So it's actually gone down. So that's the only difference with progressive and regressive. So let's see how that's going to affect their take home at the end of this. So again, they're both starting with the 20,000. So we'll just do that calculation first. And that was at 15%. So we've got 3,000, and that'll be the exact same for Emily. And now anything over 20,000. So we know Jack has 10,000 over, and Emily has 40,000 over. And now these rates are less. So these ones are 0.05. So 5% as a decimal is decimal 0.05. So that's how we'll calculate these. And so for Jack, we've got 500, and for Emily, we've got 2,000. Now we just need to figure out their totals. So we're going to add together their two tax amounts there. So we've got the 3,000 for Jack, as well as the 500, which is a total of 3,500. And for Emily, we had 3,000 plus 2,000, which is 5,000. And then to see how much they have left after paying tax, we'll do that final subtraction. So we'll take their income and minus their total taxes to figure out how much they actually get to take home. So Jack gets to take home $26,500. Now let's figure out Emily. We'll subtract her total from her taxes, and she'll get to take home $55,000. Okay, so that's it for those 3 examples. So what you need to file your taxes. So this is what I was referring to above, that you'll be sent, or you might actually even have to download yourself. It just kind of depends on your employer. If they have an online system that allows you to download it yourself, then you may do that. If not, they'll give you a paper copy of it. So when you work, your employer usually takes off income tax, EI, and CPP from your pay stub and sends it to the government. So they do that for you. You see that coming off your pay stub. And they should give you this pay stub to show you how much income tax was paid each time. Your employer then also gives you a T4 slip. So this is one of the things that you're going to need when filing your taxes. And they should give you that by the end of February each year at the latest. And that'll show you how much money you made the entire year before and how much income tax and EI and CPP you paid in the entire year before. So again, sometimes you might need to download this by yourself. For those of you going off to university or college, after your first year, you'll be able to download your, it's called a T2202A slip. So that's something you would need, a different type of slip here if you're going to post-secondary, so either college or university. So you'll need that. And again, your school may send you a paper copy, or you might just have to go onto your, your student portal and download that yourself. So this will just show you your tuition and different things that you need for school when you're filing your taxes. Throughout the year, make sure you also keep any receipts if you've donated to any charities, because you'll also need those when you're filing your taxes. And now, some forms. So these are now the government forms. So these aren't ones that are sent to you. These are just what you'll need to use. So like I said, if you're doing it by paper, you would kind of get copies of these by paper or download them, and print them yourself. Some of you may be getting someone else to fill these out, so they'll be filling them out for you. Or you'll use like a computer program that has these forms built right into it, so you don't need to actually write anything on paper. And so the forms, the most basic ones that you'll for sure need will be a T1 general form. So this is for your income tax. And you'll also need a Schedule 1 form. So that's your federal tax. There are a few other forms, but we're not going to go into all of them. There's tons and tons of forms. But the most basic ones, if you've just got kind of a job and not too many complicated things when you're doing your taxes, would just be those 2. And if you do go to college or university, then you would also need a Schedule 11 form. So you can get copies of these forms at the post office, from a Service Canada, online, or it's built into your tax software, such as TurboTax. Now, after you file your taxes, so you're going to send those off, the CRA will check it to see if there are any mistakes. Then they will send you a notice of assessment, which just kind of summarizes anything and also has any changes they made. So if there were mistakes and they had to fix a few things, it'll be on that for you. And if you get a refund, there will be a check at the bottom of this that you can then go deposit to your bank account, or you may have it set up to get direct deposit. So it'll just go into your bank account automatically shortly after you file your taxes and the government's had a chance to kind of look through everything and check for mistakes. If you owe money, it will also tell you on this notice of assessment how much you owe and how to pay the CRA. So now we're going to have some practice actually filing our taxes. So we're going to use these things, our T4 slip or a T222A slip, and we're going to actually then fill out these government forms like the T1 general or the Schedule 1 and so on. So we've got some examples here. So our first example is about a high school student named Catherine Casey. So you can see below we've got a sample T4 for her. So that's that thing that your employer will give you once a year by the end of February that just kind of shows that information you need for your taxes. So we've got this information about Catherine, but I'm going to stop the video here because there's actually another video that goes through this in much more detail, and I want you to follow along with that video. So we'll need the T4 slip, which I'm going to give you a paper copy of, and then she's got another T4 slip because she actually has 2 jobs. And if we look closely, we'll kind of read a little bit about her before I send you off to the other video. So Catherine Casey was born on November 13th, 2000. She works part-time at Best Bookstore and Mario's Pizzeria. So she's got 2 part-time jobs. Last year, she earned $300 in tips. So on top of what she earned through her paychecks, customers also gave her tips. So those were kind of part of what she took home as her income. And those aren't included on her T4 slip. So that'll come into play later, as you'll see as we're filling out our forms. And so we want to complete Catherine's tax return. So we're going to need 2 forms. We're going to need our T1 General, which I've put into our Google Classroom, and also a Schedule 1. So we're going to look at both of those and keep referring back to both of Catherine's T4s, and remember that she also made $300 in tips. Okay, so I'll end this video here, and now I will send you off to the next video to go through and start filing Catherine's taxes. All right, see ya.